After the bell today, Nvidia committed up to $105 billion to bankroll OpenAI's Ohio AI campus. That is the biggest single financing pledge we have seen for an AI data center, and it is just one of tonight's stories. I'm Lena, and here is what moved after the close. The Pike County, Ohio campus will exclusively host Nvidia AI compute under a 20-year lease. That 105 figure is actually 58% below the $250 billion ceiling first reported in July. Nvidia is also putting $1.5 billion directly into SB Energy, the campus developer. OpenAI and SoftBank Group each committed another $500 million to SB Energy on top. The message: Nvidia is not just selling chips anymore, it is financing the buildings they sit in. Meanwhile, chip startup Groq raised $350 million at a $3.5 billion valuation. That is down 49% from Groq's $6.9 billion peak back in September 2025. The twist: Nvidia, Groq's former rival, is one of the investors in this round. Back in December, Nvidia agreed to license Groq's LPU chip architecture in a deal valued near $20 billion. Groq has now raised roughly $1 billion this year, pivoting from chip design to renting Nvidia GPUs as a Neocloud. Turning to tomorrow morning, Walmart reports fiscal second quarter results before the bell. Consensus wants adjusted earnings of 74 cents, up almost 9% year over year. Revenue is pegged around $186.9 billion, roughly 5.4% growth. Management's own Q2 guide was $181 to $186 billion, so consensus is sitting at the top of that range. Three things to watch: comparable sales, e-commerce trajectory, and any commentary on tariffs. Now a quick earnings sweep from after the bell today. Roper posted headline earnings per share of $11.62, but $835 million was a non-cash markup on a minority stake it does not operate. Strip that out and core pre-tax income rose less than 1%. ConocoPhillips set adjusted earnings per share of $3.24, beating consensus near $2.96. Realized prices jumped 36% per barrel of oil equivalent while production actually fell 6%. Rockwell Automation grew organic sales 10%, with only 1 point from pricing and the rest from real unit volume. Management raised full-year adjusted EPS guidance to $13.15 at the midpoint. Cadence's headline operating margin looked like it jumped to 28.4% from 19%. But nearly all of that came from lapping a $128.5 million export control charge. The adjusted margin actually slipped about 60 basis points. The real story was China revenue up 96%, with remaining performance obligations at $8.1 billion. A few more headlines before we go. Union Pacific collected about $91 million more in fuel surcharges than it spent on diesel last quarter. It is the only major U.S. railroad running a net surplus on that measure through the first half of the year. Prediction market Kalshi now puts Paramount Skydance's takeover of Warner Bros. Discovery at 74% to close. Run that back through WBD's share price and it implies a break value near $15.59 per share if the deal dies. And SERV Robotics is expanding to Washington, D.C. and San Jose, its 7th and 8th major markets. SERV also signed Grubhub as a second delivery platform, days after Uber sold its entire stake. Watch item for tomorrow: Walmart's numbers land pre-market and will set the tone for consumer names all session. For the full analysis on all these stories, head to LineVestnews.com and sign up for LineVest Daily. See you tomorrow.